Welcome back to the Traders Network. I'm Michael Yorba, your host. We're also streaming to you live on yorbamedia.com. Thank you. The topics that we've got on the show today are going to be memorable. I'm sure about it. My guest this segment is Nick Santiago, President and CEO of In the Money Stocks. Nick, thanks for coming on.
Thank you for having me, Michael.
My pleasure. You know, you're really making a big scene here with the audience in the shout box. They're stacking up before you show up, going, okay. I'm going to read this just briefly so people who are in the car looking at this can or listening to us can get an idea of what some of these guys think about you. Nevada, great show. Can hardly wait for Babe Ruth, Nick Santiago tomorrow. And he's talking TLT, GLD, SPX, FXE, trading just like he called them last week. And then I've got 5 other things to ask you.
Well, it's good to see people are listening, and tell them to come on by and take a test drive, see what we're made out of, and we'll steer you every which way we can the right direction in this market. It's been a great 2011, and we're looking to make even a better 2012. And
what, like one of our other guests said earlier today, what's really good is that it's actionable information that you get from the show, from you, and it's working. It's working for people. It's not just cannon fodder that we're bantering around in the room with. It's actually stuff that people are, not that you should be taking the trades from the show. Don't do that. But this is what we're supposed to do on air when we talk about investments, is be right on what we think is going to happen. Right, Nick?
Well, that's what we try to do each and every day in this market. And we've been around 5 years now, and I'll tell you this much, Michael. Once a person subscribes, and they give us a real shot, meaning they stick around for 60 days, they rarely ever leave. And that's the God honest truth. Our business has grown exponentially, and subscribers become lifetime members. And we do our best. We're not always going to be correct. You have to use stops, and you have to be prepared in this crazy environment with central bankers and governments involved for anything to happen. But for the most part, we're going to give you our honest opinion, show you exactly what we do, how we do it. And if you learn that, you could learn to trade these markets and become recession-proof, essentially.
That's a good way to put that. Let's start with the gold market.
Yeah, the gold market, if you remember, I was on your show. I had talked about the 1,800 level on spot and the 175 level on the GLD. And so far, I mean, we went to, on the GLD, I guess we got to, high of 175.46. So, we're off by a little bit sometimes, but it has pulled back rather sharply, and it's tagging the 50-day moving average today on the daily chart. So it's been a good little sell-off, and I just want to, inform all your listeners that, at some point next year, I'm going to issue a buy alert. So those of you that think, maybe gold is over, gold is in corrective mode right now, and that's really all there is to it. Everything that has a 10-year run needs to correct once in a while, and I believe gold is simply just in a correction phase, and it will be for a while. And then, sometime next year, you will get that chance to own gold on the long side once again.
Okay, well, before we leave the subject of gold, you do have a question regarding that in the shout box, and let me quickly get that out here. It says, Michael, last week Nick mentioned silver bottoming in 2012, but didn't want to give a date. Would you please ask him if he would tell us what quarter in 2012 this might happen, or at least which half of 2012? Thanks. Now, before you answer, Nick, this is why you go to talk to Nick offline. Answer it any way you want to, but I just want to make that statement. That's why you go talk to Nick in person.
Right. You come over. Our subscribers all, have I've already told them, and even when, earlier in 2011, we were bullish the first half of the year, and around August, we had mentioned, I believe I was even on your show, I said we are not bullish gold anymore. It needs to go into its corrective phase just due to the cyclical nature of gold, and silver for the same part. Silver actually topped earlier, but it was doing this. The gold was doing the same exact thing. But we reserve that for subscribers. I can't give out the dates all the time, but the dates have been very, very effective. And when we get to that period, we'll definitely let you know.
The answer is go be a subscriber, and you'll get that question answered. All right. Well, how do they get? Let's address that right now. How do they get to be a subscriber?
Over to inthemoneystocks.com and sign up. We give a 7-day free trial. You see what we're made out of. Usually in 7 days, you'll have enough there. There's so much. We put out so much content, so much information that's so informative to all the members. We hold 2 live broadcasts each and every week for all of the members. And if you're in the chat room, you get a live broadcast every single day, which is completely interactive.
Good. Now, before we get to China, you've got another question in the shout box, but it has to do with TLT, and I know you want to talk about that today. So let me get the question out, and then maybe you'll be able to answer it with the rest of the topic on TLT. It says, last week, Nick had one more rally than lights out for 2012. Please ask him, and I know that you were talking about this for the TLT, if he thinks March 2009 lows will be tested in 2012.
No, I don't. I mean, there's always a chance. I never know how high or low something will go because we never know the amount of inflation that was created and the amount of deflation that's going to vacuum it down. So we never actually know. But I have a system where I do mathematical calculations. I call them master levels, and I'll be able to pinpoint where the market will find a very, very solid support level. But I do not expect the 2009 lows to get taken out in the next downturn.
Okay. Let's go back to the TLT because you were expecting, and I remember this, you were expecting a little bit more of a rally on the TLT. We're getting that, and then an ultimate top. But you take it from there on the TLT, where we are, where you think we're going.
Yeah, well, we're still moving up a little bit here. It's not going to be a straight-up move. You never know because the European crisis is coming into play. But right now, TLT looks fine. When I had talked about it originally to you, I talked about the 110 level being the buy point. And then even when it got down, I guess 116, I said there's another decent little pattern. Now we're trading back up to the 120, 119, 60 level today. It still looks good. What I would tell anybody in it that's a listener is really just trail your stop right now. And maybe this day makes a move up to 124, 125. I mean, it's not unrealistic that can happen.
Okay, thank you. Now let's move into China.
Okay. We talked about China recently, and I just want to reiterate that China is experiencing a real big growing, I should say a birth pain here. And their real estate market is in some serious, serious trouble. It's a bubble. Just the same way we had a bubble in our real estate market, they're going to have a bubble in their real estate market. They're going to buy less commodities, so you traders want to watch and realize that we're going to probably go into, we've talked about copper here now for a while, Michael, and how I'm bearish copper, and that same outlook remains. But when the Chinese stop investing abroad, and they are not investing in the European debt crisis, they are not investing in any more copper, when they slow down, the world slows down. And that's what you have to watch for, going forward into the new year.
Okay. And what are you seeing at this point on that note?
Well, right now, we're going to go into the holidays. So things, will get up. I guess we'll look a little bit better. The Chinese will probably do a little bit of an intervention with their currency, as they've been, and the United States does the same thing as well. But I think we're going to see, at least in the first half of next year, a little bit of a currency war between the United States and China. You already see the developments taking place. President Obama was in Hawaii, and he actually made a speech about that, and the Chinese really were not too happy about it. Considering we buy the Chinese goods and they make them, it's almost one hand washes the other. It's basically the same dollar pays everybody off. But when the dollar depreciates, some party is not going to be happy with that dollar when they receive it again. And that's what we're starting to see develop.
Are you about to say that you're looking for the dollar to start dropping pretty hard?
No, I think the dollar is going to show some strength into early 2012.
Okay.
But my overall forecast for the dollar is definitely bearish.
All right. So
bigger term, longer term.
I just wanted
to. I'm still bullish the dollar.
Okay. All right. I got that. All right. Amazon, you wanted to bring that up.
Yeah, Amazon actually hit a very, very attractive level today. It was something I shared with my subscribers this morning. Around 203 is a very attractive level. It may go down a little bit more if this market weakness continues, but right now it's holding that level. But what traders want to know about right now is the seasonality trends for Amazon are starting to become favorable. Usually around Thanksgiving into maybe a fair amount of December, Amazon will usually make a move higher. It's options expiration, a lot of institutional game playing right now. After options X, though, I will be watching Amazon closely as a buy.
Okay. Any idea of price levels? I'm looking at this low here back at the end of last month. Are you thinking that what is that? I don't have a accurate number, but a little over 195 maybe.
Yeah, that actually was the 200 daily short moving average. The 200 level looks real desirable. I even like it even at 2. If it was not options X, I'd be a buyer here at 203. But because it is options expiration, we'll give it a little bit of time. But this is something I'll look at next week. I think 200 is a very, very good number. Depending on how pattern forms, we had a pretty sharp sell-off day today, and most people see a sell-off day like that, they won't be looking to get involved in a stock, and here I'm looking to nibble on it. So right around this 200 level looks pretty desirable. If it gets there, maybe a little bit lower, like you said, last month's low, which was 196.50.
Thank you. All right. But in order to really hone in on that trade, they need to go into your trading rooms. Give us the web address, and then we're going to have to go out on that one.
Sure. The web address is inthemoneystocks.com, and give us 7 days and see what we're made of.
Come in and watch them trade that stock. All right, Nick. Thanks so much.
Thank you, Michael.
My pleasure. Ladies and gentlemen, that's Nick Santiago, president of inthemoneystocks.com.